Anyone who's ever started a business knows the biggest pain is getting hold of funding. You go to the bank manager, you wear out your trousers at the knees and get sent away. Well, what about the concept of crowdfunding? Patrick Schofield is with Thundafund. We've also got Sean Emery. He is with RainFin. He's the chief executive of RainFin. The history of crowdfunding, does it come in response to going to the bank manager on your knees, Sean Emery, and begging and saying to people, there's got to be a better way?
That's exactly what happened. People say there has to be a better way. But ultimately, we all used to do this. When we started our businesses, 95% of us went to friends and family and fools, asked them ultimately would they lend us some money because we had a great idea. And banks weren't really funding the great idea piece. So crowdfunding originally started its first concept as people saying, well, I want to produce 25 of this widget. I think this widget is a great thing. But I need someone to buy the first 500 so that I know I've got enough capital to buy the machine. So if you could pre-sell those 500 to 500 people, say, okay, look, I want one. I don't mind giving you 100 Rand in the concept that hopefully I will have that product when it's finished and give you the opportunity to go and build it. You can get that funding from the crowd. And that's how it really started.
Okay, so it starts as a concept of I give you money in return, an advance purchase of a product or a service or whatever the case might be. It's evolved, Patrick, has it not, over the last couple of decades?
Very much so. And you know, as Sean mentioned, that's what very much started, and that's in essence what we do, is you allow people to test an idea. And in many ways, if you think you go to a bank, you lend 100,000 Rand from a bank to start a new idea. You then have to sell probably R1 million worth of product to pay back that 100,000. The beauty of crowdfunding, as you spoke about there, is you say, we've got a fantastic idea, for example, to open a chocolate cafe. Instead of borrowing 100,000, you say, well, I tell you what, if you put 250 Rand or 500 Rand, we'll give you 5 bars of chocolate or 10 bars of chocolate.
You're talking about a real life example, because there's a chocolate cafe somewhere here down below us.
I actually am, and it's one of my favorite examples is that these guys make chocolate. They're called Honest Chocolate, and they want to open a cafe. So instead of going to the bank, they came to us and they said, what can we do? And you know, their favorite reward, 5,000 Rand, you got a chocolate lockdown for you and 12 friends.
For as long as you like it, until you start throwing up, I suspect.
Exactly.
And that's all well and good, but then people get this idea that perhaps this is the easy way to go, Sean. Surely the same rules, T's and C's apply when it comes to if I'm borrowing money via you through a crowd or if I'm going to the bank and asking.
I think very much it's quantum that you want to buy and how much quantum you want to lend and what you need the money for. So it's quite easy for us to just raise money from 10,000 people who give you 250 Rand to start something new because you want those people to be deeply involved in it. But a lot of times organizations then grow in scale, and the next amount of money that organization might need might now be R1 million for the franchise that they want to go through. So when they need R1 million, perhaps you start now needing to have people who give you funding on a more of a commercial return. So perhaps they might want now a reward, but also you promise them a little bit of interest, or you promise them a share in your company, and that's how it has evolved. So you can encourage the donations or the loans or the funding, or whatever you want to call it, from the crowd by offering them more and more of an incentive to give you the money. So first might be a product, or then might be interest, then might be a stake.
But don't you run the risk then of becoming just another bank? Isn't that almost the natural evolution of crowdfunding?
Well, just remember that a bank takes a huge amount of margin. So what we are trying to do with these crowdfunding platforms is bring directly the borrowers and the lenders together without having someone in the middle. So yes, I suppose I as an individual might have taken my money, given it to a bank, they pay me 5%. And then that bank lends it on to the chocolate people and lends it to them for 18, 19%. There's a huge, why is the bank making that difference?
Ultimately, it's all about taking risk, the bank managers will tell us.
Yes, but I mean, ultimately, I can take that 5%, give it to a bank and say, all right, I'm prepared to take a risk. And I like these guys. I know that I understand their story. I buy lots of chocolate. Look at me, I buy lots of chocolate. So I'm prepared to give it to them for 10%. And I'm quite happy with that, and they're happy with the 10%. So this is the bringing those two parties together for a more reasonable deal. I think that's where these platforms go. So RainFin specifically deals in those commercial loan agreements between parties.
So you're basically a private equity fund?
No. Private equity funds are different. We don't take equity stakes. Private equity really wants to have a 10 times return or 20 times return. Ultimately, that's a different market. We're dealing in a market where people lend money to one another.
Okay, so you're in the caring, gentle side of lending. If I want to be a lender, if I want to be an investor, but I lack the capacity to do the detailed analysis of the chocolate shop option or any other crowdfunding opportunity, I come to you and I say, here's $100,000, get me a return. How would that work? How do I become a funder as part of this process?
You know, when you talk about getting a return, how the crowdfunding works on Thundafund is it's very much rewards based. So we look at when people are looking to test ideas, and when you spoke about are we in the banking space? Are we a bank? As I said, banks look to make significant returns. What we look to do is very similar to what has happened in many other areas. You take out the middleman, who's the bank, and there's always these ideas that you will speak to a VC person. And per person sits there like Dragon's Den, so the program where you have a bunch of people sitting there, and an entrepreneur comes and he sits there and he says, I've got my idea, and those guys say, well, here for 100,000, I'll take 20% of your company. Those guys only get it right 20% of the time.
Absolutely.
So what this does is you turn your chair around and you face the audience and you say, look guys, I'm not really interested in the VC guy. I'm interested in speaking to you because you're the customers. What better way to launch a business than testing your idea?
But once I've gone through the launch phase and I've given you your chocolate lockdown, you've had 3 chocolate lockdowns in 3 months, and not even Sean could take another chocolate lockdown. At some point, I'm going to want a return on my money. It's all nice, and I walk past the chocolate shop, I take a sniff, and I was part of that. I can be proud of that. But it gets to the next stage where then I go to Sean and I say, okay, now I need to franchise my chocolate lockdown.
No, very definitely. I mean, we have a target to try and go to 1 billion rands worth of lending this year through our RainFin platform.
What did you get last year?
Last year, 150 million. So we're very, in this context, it's a massive jump for us. Obviously, the investment from Barclays Africa into our business is helping us to do that. So fundamentally, we do have to do a lot of that evaluation of the companies that come forward. That's a slightly different role to where the pure crowdfunding sites are not going to go and recommend and rate and give rankings and credit scoring to the applicants that they have on them. Ultimately, going to create the platform for people to connect with one another. In our environment, it's very important for us to go and say an SME, when he applies, is actually score them, rate them, give them ratings, do what their credit scoring is, and give a perspective of what you should or could be asking as an investor on a return if you put your money in them.
But are you not more than in the peer-to-peer lending space? Because now it's suddenly no longer about the crowd. This is about the crowd. Now we've evolved from the crowd. It's the evolution again of crowdfunding.
Well, maybe what I could say there is that the two work very nicely together. Because when you're talking about the vetting things, banks act as vetting agents. In essence, when people have successfully crowdfunded, let's go back to the chocolate guys. When the guys have gone through the 3 chocolate lockdowns, you then have a very good idea that they're probably likely to create a good company going forward. So it then acts as a reference for moving on to the space where you go for the 10 million or 20 million.
Well, I don't know. I hope that both worlds can ultimately, I hope that we can do it at one stage, $1 billion rand worth of crowdfunding. It just depends on where the source of the money is. So the source of the money from a South African context at the moment is sitting a lot with wealth managers or investors or big corporates who've got the significant capital.
But they guys are restricted. I mean, they're restricted by trustees, they're restricted by mandates, they're restricted by all sorts of things. I mean, you look, for example, I don't know, randomly choose a couple of companies. Google, huge cash piles. Apple, for example, the best results of any company in history, making something like 2 billion rand a day in profit. These guys are sitting on cash piles. Are these not the guys who will fund the development of the evolution of small businesses in the future?
Bruce, you've just touched on what I feel is going. When we're sitting here in 5 years' time, people will say, Bruce, you hit it on the nail on the head. I believe it in South African context now, that corporates are going to be the kickstart of this SME funding that South Africa needs.
But government's doing that. So why should corporates bother?
Google has just done it now. Google now has already launched a program where they are funding through a peer-to-peer marketplace, which is Lending Club. They obviously have a stake in Lending Club. They're using through Lending Club, they're lending $600,000 to 10,000 SMEs across the US. Those 10,000 SMEs happen to be distributors of Google product. So if you qualify, therefore they know who you are, therefore they crowd, they understand you, they know your customer, they're prepared to lend you the money, and your interest rate that you're going to pay will go down depending on how much Google product you sell. So if you sell a Google product, it's good for them, right? They don't have to make an interest return. And that's what is so interesting about crowdfunding and peer-to-peer lending and marketplaces, is that people that don't have only an recurring interest mandate will enter the market as lenders. The chocolate guy wants the chocolate. He wants the company to be successful. So I provide him capital. He uses that capital to sell more of my product. I make a huge margin on the product, so why not give him financing for free? And that's going to challenge banks.
I just remember Michael Udan talking about this years ago, saying he wasn't sure how it was going to happen when he was running FNB, but he didn't see the biggest threat coming from Nedbank or Standard Bank or from Barclays Africa. He saw the biggest threat coming from the likes of a Google in the future, because precisely that, they have got the capacity to do the lending that others perhaps won't, plus the technology, plus the distribution. When one looks then at the space in South Africa, it's not huge. What's going to be the catalyst then for crowdfunding when we look at it, Patrick? Because I think you've distributed something where you've been a conduit for like 4 or 5 million rand in the last 4 years or so.
Yeah, it's in the last year.
In the last year, beg your pardon.
But then the kind of catalyst, or the kind of sort of next quantum leap that's going to happen is 5 years ago, crowdfunding in the way we're doing it and the way you're doing it is almost was impossible.
Because you went to Davos, I think 4 or 5 years ago, and you spoke to them there, and people's eyes lit up, and then it all went dim again. It was a bit like an ESCOM moment.
With ESCOM for another time.
Yes.
But what's changing is two things. One, the ability, the number of people and the scope and depth of internet penetration in South Africa. And the second thing is the ability to pay online and the trust of people paying online. Those two things coming together. In our world, you want hundreds of thousands of people saying, here's 50 rand, here's 100, here's 500, which I'm going to put towards that, or 1,000 or 5,000. But it's those many hundreds of transactions that are going to grow it. And it's those two things, internet penetration.
But at what point? I mean, it's all well and good to be rewarded with a night in a chocolate factory with Charlie and my other friends. But at some point, there's got to be a unit trust opportunity. There's got to be some kind of crowdfunding unit trust where I can invest my money and get a return, take more risk, accept the fact that I could lose my shirt, but be willing to do it for a benefit from the greater good, a bit like buying a lottery ticket.
You know what? It will happen, absolutely. But right now, what excites me and what I find as a really interesting opportunity now is you need the 10,000 bubbles of new ideas coming through to create the 1,000 new business ideas, to create the 100, create the 10, to create the 1. We're working with the 10,000 to the 1,000. You're working with the 1,000 towards the 100. And so you need those stages coming together.
It's absolutely fascinating, and I wish you really both a huge amount of luck in making it work, because South Africa definitely needs a lot more small business, and needs small business to grow into big business. Remember, even Anglo American was a small one-man business at one time. That was a long time ago, but that's how it all starts. Patrick Schofield is with Thundafund, and Sean Emery is the Chief Executive of RainFin. That's all been about crowdfunding and finding ways to raise money more innovatively, and also if you've got spare cash around, you can become something of an angel investor yourself. You can put money towards great projects and make a contribution that way. That's it from Tonight with Bruce Whitfield. There'll be more Tonight tomorrow. Till then, bye-bye.